Welcome to this deep dive. Today, we're plunging into the often complex, always fascinating world of building wealth and mastering financial strategies.
Yeah, it really feels like standing at the foot of this huge mountain of information sometimes, doesn't it?
Totally. And that's exactly why we're here, sort of like your guides. We've sifted through a whole stack of material, um, pulling out the most valuable nuggets on everything from the psychology of money,
And practical tools.
right, practical tools, diverse investment paths, real estate tactics, and even some surprising lessons from, well, history and film.
So our mission really is to help you cut through all that noise, identify the core insights, and walk away feeling hopefully significantly more informed.
Whether you're just starting out on your journey or maybe looking to level up your financial game.
Yeah.
So get ready. We're going to explore the mental side of wealth, dive into essential tools like tracking your net worth, compare different investment avenues,
Stocks, rentals.
stocks, rentals, digital products, and the real nitty-gritty of real estate with strategies like BRRRR.
BRRR. Got it.
We'll find inspiration in some incredible stories of resilience, learn some wisdom from past market mishaps, and even challenge the traditional definition of what wealth truly means.
Okay, sounds like a plan. Let's unpack this stack of sources.
So where do these sources suggest we even start when thinking about building wealth? It might sound a bit surprising, but the very first thing they seem to highlight is something called the mindset trap, keeping you poor.
Yeah, and what's really fascinating here is the emphasis the sources put on the internal game. It's not just about strategies. They argue that lasting financial growth isn't just about learning tactics. It's fundamentally about identifying and, shifting those limiting beliefs, often rooted in scarcity.
That poverty mindset they mentioned.
Exactly. That's the term they use.
So it's like you could have the perfect investment plan, but if deep down you think you're not worthy or money's bad, you'll just sabotage yourself.
That's precisely the idea presented. Recognizing these traps, these mental hurdles, and actively working to reframe your thinking, that's shown as a foundational step. It's like building fertile ground, for financial progress before you even think about planting any seeds.
Okay, that makes sense. And once that mental groundwork starts shifting, the sources immediately jump to a key practical step, understanding and calculating your net worth.
Right. This is where the rubber meets the road, so to speak. The sources frame calculating your net worth, which is, basically adding up everything you own.
Your assets.
Your assets, yeah, and subtracting everything you owe, your liabilities. They frame that as absolutely crucial.
Why is that number so powerful, though?
Well, it's presented as the essential snapshot, your current financial health, right there.
Okay.
The sources really highlight that knowing this number lets you set realistic, measurable goals and make truly informed decisions about future investments, spending, everything, really.
So it's the baseline.
Exactly. It's the baseline you need to effectively measure growth over time. You move from just guessing to tracking things, as they say, like a pro.
Okay, so baseline established, maybe a healthier mindset forming. What's next? The sources dive into different ways to build assets and income. A classic comparison they explore is stock dividends versus rental income.
Yeah, this is a big decision point for a lot of people. The sources lay out the pros and cons of each. For instance, with stock dividends, you might get liquidity.
Easier to fill quickly.
Right, and diversification relatively easily. But you're also subject to market volatility you just can't control.
Whereas with rental properties, you've got more direct control over the asset itself. You can benefit from leverage, potential appreciation, but
Yeah, you're signing up for the headaches too, right?
Yeah.
Tenant management, leaky faucets, maintenance, and potentially less liquidity. It's harder to just sell a house tomorrow.
right.
So the material really stresses that the better option isn't universal. It completely depends on your specific financial goals, how hands-on you actually want to be, and your personal tolerance for different kinds of risk. What keeps you up at night?
Good point. Now, stepping away from those traditional assets for a second, the sources also explore the potential of selling digital products.
Ah, yes. The allure of make money while you sleep. That's the dream, isn't it?
Oh, yeah. Right.
The sources discuss this as a way to create a potentially very scalable income stream by leveraging expertise or skills you already have.
So instead of just trading your hours for dollars, you create something once, like an ebook, maybe a course, software, templates.
Exactly, something digital. And you can potentially sell it over and over again, maybe even to a global audience, without much extra work per sale.
Okay.
That's the core idea presented. It's about decoupling your income potential from the strict limits of your time. using your knowledge as an asset itself to generate passive revenue.
Interesting. Shifting back to real estate then, the sources really dig into a specific repeatable strategy, the BRRR strategy. That's BRRRR.
Right. This method is outlined as a pretty powerful way to actively build a real estate portfolio. The steps, as the sources detail them, are buy a distressed property.
Needs work.
Yeah, usually below market value because it needs work. Then rehab it, fix it up to increase its value. Then rent it out to generate cash flow.
Okay.
Then, crucially, refinance the property based on its new higher value to pull out your initial capital, or most of it. And then repeat the process. Use that capital for the next deal.
Wow, okay. It sounds like a cycle really designed for pretty rapid portfolio growth I guess if you can find the right deals and manage the rehab part effectively.
That's the key, exactly. Finding the deal and managing the project. The goal, according to the material, is definitely to create passive income from the rent, while simultaneously building long-term wealth through equity growth and continually recycling your capital into new deals. It's presented as very hands-on, but potentially very lucrative.
So we've covered, the numbers, the strategies, but wealth building also has this really profound human dimension. The sources make this crystal clear by shifting focus to a section called Rich Reads Real Wealth, and they specifically highlight the movie The Pursuit of Happiness.
Yeah, this is where the material pulls inspiration directly from real life. It uses the incredible true story of Chris Gardner to illustrate a really core principle.
His journey. I mean, going from homelessness, raising his young son all alone while trying to break into the super cutthroat world of Wall Street through an unpaid internship. It's almost unbelievable.
It really is. And the big idea the sources extract from this isn't just about, becoming a stockbroker. It's the sheer raw power of resilience, that relentless hustle.
So not giving up.
An absolute refusal to give up, no matter how bad things got. The sources actually call it a masterclass in grit.
So why does this particular story matter so much in the context of building wealth?
Because, as the sources point out, it's such a potent reminder that your dreams aren't necessarily limited by where you start. If you feel like everything is stacked against you, Gardner's story, navigating shelters, trying to look professional with hardly anything, it serves as incredible inspiration. It shows what's possible.
And the suggested action step from this, basically, don't let setbacks derail you. Find some way to keep moving forward.
Right. And the material adds a kind of lighthearted note, like maybe don't try to cold call clients from a public restroom like he had to.
Probably good advice.
But the core message is about maintaining that persistence, that dignity, even when facing extreme hardship.
And the hot take.
The hot take from the sources. This movie is presented as compelling evidence that almost anything is possible if you combine that refusal to quit with a clear plan. And, maybe a little help, but the primary engine is that internal drive.
Okay, to give us some broader perspective, the sources then throw in this fascinating historical anecdote. It's from their Wealth Whiz Did You Know section.
And it's a classic cautionary tale, really. The world's very first recorded speculative financial bubble. It wasn't about tech stocks or crypto or even subprime mortgages. It was about tulips.
Tulips, seriously, like the flower.
Yes, exactly, the flower. In the 17th century Netherlands, prices for certain specific tulip bulbs apparently skyrocketed to absolutely astronomical levels. We're talking equivalent to houses.
Wow.
Before predictably crashing dramatically.
So what does a 400-year-old flower fad tell us about building wealth today? Seems kind of random.
Well, the key takeaway the sources draw is that market hysteria, collective excitement, FOMO, can inflate asset prices wildly beyond any kind of rational intrinsic value.
Right.
It's a really stark historical reminder to be cautious, be careful about getting swept up in the excitement of the next big thing.
Right.
As the material kind of cheekily puts it, tulips didn't last forever, but financial regret from chasing bubbles just might. It's really a call for grounded, rational decision-making. Don't follow the herd off a cliff.
That's a powerful parallel. Okay, and finally, the sources offer something called a Wealth Potpourri wildcard that takes us in a completely different, really unexpected direction. Embracing the pause. Finding wealth in stillness.
Yeah, this section offers a beautiful counterpoint, actually, to all the focus on hustle and numbers and growth. It speaks to the value of simply pausing, just breathing.
Connecting with nature.
Connecting with nature, yeah, and just allowing yourself moments of stillness. Not always doing.
So literally stepping off the treadmill of constant achieving.
Exactly. The reflection offered here is that true wealth isn't only defined by your net worth number or your stock portfolio or hitting that next big goal.
Hmm.
The sources suggest that moments of peace, of clarity, simply appreciating where you are right now, that can be just as valuable, perhaps even more so for your overall well-being, than any paycheck.
That's a powerful reminder that the pursuit of financial wealth shouldn't completely overshadow the richness of simply being.
Yeah. So as we wrap up this deep dive, we've really traveled through quite a landscape, haven't we?
Definitely.
From that crucial inner work, shifting your mindset, understanding those traps, and the fundamental practice of tracking your net worth
Right.
through specific strategies for building assets like stocks, rental properties, those digital products, and that hands-on BRRRR method in real estate.
And we found some powerful inspiration and resilience, didn't we, from Chris Gardner's journey, and learned a hard lesson about market euphoria from tulips.
From tulips, yeah. And finally, we considered that profound, often overlooked wealth that can be found just in moments of stillness and peace.
The sources really synthesize this range quite well in their Take This With You section. They reinforce that building wealth effectively involves a mix, really. A mix of smart actions across different areas. It's not just one single path.
Right.
Whether you're focused on buying stocks, maybe exploring digital products, tracking your net worth diligently, or getting hands-on with property strategies like BRRRR, diversity in your approach seems key.
And they pair that with some really crucial advice, too. Resist that fear of missing out FOMO. Cultivate patience. And really assess your readiness before jumping into high-risk ventures. Don't get ahead of yourself.
Keep it smart, keep it steady, and maybe hold off on putting that for sale sign on a flip property until you are absolutely sure the rehab is solid and the market is actually right for selling. The practical tip there.
Good one. Okay, so here's a final provocative thought for you to maybe mull over. We've explored these practical, actionable steps for building tangible financial wealth. We've drawn lessons from market history, from personal resilience, and overcoming huge challenges. We also touched on this profound, maybe intangible wealth found in stillness and peace. So the question is, how do you envision balancing that active, strategic pursuit of financial growth, the planning, the investing, the hustle, with valuing and actually making time for those moments of simply being? And how does that essential quality of resilience help you navigate the challenges in both areas, both in your financial life and in finding that inner peace?